Hello, I'm Michael Glass from the FXcast Market Analysis team. This is our market analysis for Tuesday, July 19th. In each of our videos, we try to come with high probability trading setups. We'll look at the gold chart to see if there's any leak sentiment. We'll come with a low volatility watch list, an inside bar watch list, and we'll review the economic calendar to see what could affect our open and potential trades. As always, please send your comments and feedback to analysis@fxcast.com. As usual, we're going to start off with our gold chart. And, we thought we might get a little pause, but, as long as the dollar keeps being weak, gold's going to keep on going. Our new session is showing a little pullback, but if we come over to the hourly, you can kind of see what happened here is we moved up. We came back and tested the support. If we scroll over, you can kind of see this consolidation in here. So we went up, came back and tested it. It became support, and then shot up. So that is a perfect example of you don't have to buy the breakout. You can let it pull back, let it test that breakout price level, and then let it take off from there. But for the majority of that, you can see that we were oversold for the majority of the day. So hard to find a place to get in. So what we're seeing is gold on a daily taken off. Hasn't really given us an immediate place to find an entry. Certainly, we're overbought. We need to find, we need a pullback. Perhaps as we're coming out of overbought, we can get that pullback at least one day. But overall, gold is on a run. And again, until the dynamics change with the dollar, until we have some of the discussions about the debt ceiling in the States solved, we could see a continuation of the flight to gold for safety. So gold is strong, and we come over and look at the dollar pairs. We've got the pound dollar, and we can see on the daily that we basically fell on this. Now, why did we do that? Well, two reasons. First of all, you can see this great day that we had. We came into a little resistance. We tested it, then we put a doji in. So the thing is, if we were going to continue higher, this probably would have been a doji. This was our indecision day. Now let's move higher. Here we opened, we went up, tested that resistance level just like we did with gold. We tested the support and took off. Well, here we tested the resistance and came right back. We put a doji, and so but it doesn't qualify as an inside bar because of the low today was actually lower. And so once we fail to make a new high, here we come down, and now we're trying to hold on the inside bar on the 200 moving average. So we see selling volume still on top. We still see light volume. It's very possible that we're going to go back in range. We thought we would get back all the way up to the top of our channel. We didn't get there. We did find resistance at the 50 moving average. When we come over and look at the hourly, first, we can see we came and bounced right off of the long-term moving average. We're basically in a neutral zone, and that's what you're going to see here even on the daily as we're consolidating in between the 200 and the 20. And so we're at the long-term moving average, we're in the neutral zone, and we can see both the dollar and the pound are below zero, although they're trying to head up. What we also see, you can see on our big candle down here, on our candle and our push down here, we did get our probability indicator kick in, and as histograms came back above, we could have found an entry. But again, that is the neutral zone, so that's an aggressive entry. What we can see though is that although the dollar is in control, look at this for the past couple of days, just horizontal. And so really what's taking action is we have just a slight move in the pound, and that's why we're seeing the sideways action here. So what we need is see the pound to either move up, and that would allow us to come back up and test the 20 moving average, or the dollar would take in control, and we will see this pair come back down and test the 1.5 price level. So this one is interesting because you can see, although we pulled back, we've had 1, 2, 3, and now 4 days of really sideways action. really sideways. So we do have an inside bar setting up right now, and we'll see if that closes that way. The euro dollar. Euro dollar, same thing, went up and tested the 20 moving average, and now we're pulling off of that. Now, what's going to be interesting is that if we go back over here again, and we can see, I think that's where we want to be. Yes. This high, these lows here, testing with these lows here. I'm just trying to get a gauge of where that horizontal support is compared to where we can see we kind of wicking here. So my point is that on the daily chart, this 1.405 price level is a level where buyers are finding value. Every time we push down there, buyers say, hold on, let's think about this. So even though the selling volume is in control, buyers are finding value here. Yes, we got one big push out of it, but immediately we came right back into the range. So what's interesting on our daily chart is that as we moved up, we did not make it back up to our downtrend channel. So if we don't push up here, we probably will see a push below that 1.405 price level. What do we see on hourly? Well, we still see that we're well below our long-term moving average. This is really, we've been seeing this for a couple of days where we're in the neutral zone, but our long-term moving average is way up here, partially because of our beautiful uptrend. And so our long-term moving average is way up here, but as far as our Bollinger Band zones, we're basically in the middle. Who's in control? Well, the euro took control. Bring it back over here. Thus, as we're looking at the euro taking control now, we can kind of see that they brought the price level back up. They found value. They brought the price level up, and now we're continuing to move up a little bit higher. That's what we're seeing in the euro taking control. What's a little concerning is that in addition, we did get our probability indicator showing that there's possibly a reversal coming. And notice that when that happened, we're up, and now we're going sideways when we start to get a little bit closer to a reversal price level. Although it wasn't extreme, it did air kiss it. We continue to see that the dollar is moving sideways. We even see that the euro is moving sideways. But as we got a little move up here, that's where we saw price move up a little bit. So we see our theme here so far is that the pound dollar and the euro dollar consolidating for days, moving sideways for days, and we have to go ahead and get ourselves out of this range. And I think the way we're going to do that is two things. We need some resolution on the U.S. debt, whether or not they're going to raise the debt ceiling limit. We need some resolution on all of these debt concerns in the Eurozone. With the pigs, Portugal, Ireland, Greece, Spain. So those, until there's with that uncertainty, we're seeing a lot of sideways action. We'll finish off with the dollar franc, and here we can see again the beautiful push down. We breathed. We made an inside bar. Now we're moving higher, possibly back up to the 20 moving average. However, selling volume still in control. As we move up, the volume has stayed a little bit light. But what I find interesting about this is that we consolidated for so long that we've made our way back into the neutral zone. Although, just like with one of the previous pairs, the euro dollar, our long-term moving average is way up here, but our price action is in the neutral zone. So we had a little bit of a franc taking control, but we can still see dollar moving sideways and the franc trying to move up. And so if that happens, that's why we're seeing right now price moving down if the franc's going to move up. But what's more important is that on the hourly, we can see that we got our probability indicator showing us of a possible reversal. Our histograms have moved back up of our moving averages. And so this may allow us to come back up to parity, and more importantly, back up to our long-term moving average. We're going to continue to watch some of the same low volatility candidates. Even though we don't have the pound dollar or the euro dollar in here, We've seen several currency pairs just kind of hang out. We got the dollar Canadian, the dollar franc, and the dollar yen. Now, again, what's interesting about that, although we don't truly have the pound yen and the euro, the pound dollar and the euro dollar in there, they could be in there. And so my point is, look at all these dollar currency pairs. Why are they consolidating? Again, think about what's going on. Until there's a decision made about the debt ceiling, the dollar seems to be ranging. Our inside bar watch is going to be the dollar yen. So we've got it both on the low volatility and on the inside bar watch list. Let's go to the economic calendar. As we come to our economic calendar, we can see we've got the survey current conditions for Germany. That's where they interview the different finance and ask them about what their opinions are about the economic climate. I find that an interesting economic release. And then down here at the bottom, we have the interest rate, the monetary policy for the Bank of Canada. We would like to thank you for watching our FXcast market analysis. As we continue to improve and make adjustments so that you're getting value from our videos, we want you to take the time to give us feedback, give us comments, send us questions about what you would like to see in our videos, and you can send those comments and feedbacks to analysis@fxcast.com, or you can post to our daily forum. Thanks, guys, and I'll see you next time.